So I get a lot of crap because everybody thinks I'm a doomsdayer. And I'm not. I'm really actually more stoic than anything. I really don't have feelings about markets. I just like the mechanics of markets. And that's what I think it's very important for you to better understand about the differences between the evolution of artificial intelligence and mechanics of stock market. Since 2019, the evolution, the growth of options in the stock market and the economy have just exponentially blown up. It's becoming one of the biggest markets out there and heavily traded markets every day. So what does it mean when you think a stock's going up and you want to buy an option against it? How does that all work? Well, you first say, okay, I think let's use NVIDIA, since NVIDIA is the most highly traded stock out there pretty much on a daily average, but also the largest in the S&P and in the NASDAQ 100. So you say, I think NVIDIA is going to $130. It closed the other day below 120. So it broke its 200-day moving average, which is a sign. But you think it's going to 130, right? Okay, so you don't want to buy, 100 shares of NVIDIA because one, it's a big amount of capital you got to spend, but also you don't want to take the risk that if you're wrong. So you go buy a call option. And let's say you think that on Friday, by this coming Friday, the 7th of February, that NVIDIA will be at $135. It'll rebound and shoot right back up. Well, you go buy a call option at $130 strike price, and you pay a fraction of the stock price of NVIDIA. So you do that. What are the mechanics of when you do that? What happens behind the scenes? Here's how it works. You buy a call option. There's a guy called a market maker. He makes a market for your purchase. So he provides you that option contract at $130 strike price that will expire on Friday the 7th at market close. Okay? So he says, well, if you're right, I've got to come up with 100 shares of NVIDIA on that day. But I don't want to spend $130 per share versus where it's at today at Friday's close of, say, 119 and some change. So what does he do? Well, he goes out and he buys 100 shares of NVIDIA stock, which then causes NVIDIA stock to go up a little bit. But let's say instead of just one person, you doing this, there's thousands of people who think the same way you do because you are a leading genius in the stock market world, right? So he and his compadres have to go out and they go buy NVIDIA stock. What does that do for the NVIDIA stock price? Give you a hint. It goes up. It goes up in value. Okay, so there you go. You own NVIDIA call options, 130 strike price. He owns 100 shares of NVIDIA stock price because you bought one share and you spent a fraction amount. He went out and bought 100 shares of NVIDIA stock price. A whole crap load, and he spent a ton of money, right? Okay, so fast forward to Friday. It's 2:55 Central Time. The market's about to close in 5 minutes. Actually, back up a little. Let's go back an hour. It is 1:55 Central Time. You're an hour and 5 minutes before market close. And guess what? Your option is only where your strike price of 130 on NVIDIA, the stock price on NVIDIA is only $125. You're out of the money. Your bet, your speculation that it would go from, say, 119 to 130. I said 130 strike price, right? Okay, it went to 125. So the option is not worth what it would be if it was $130. So it's out of the money. It's worth a little bit more, but it's not. So what do? You sell your option contract. You profit from that money that you just made. And then what does he do? He sells his shares, 100 shares of NVIDIA. What happens if thousands of people do the same thing? NVIDIA stock goes down. Look at Friday's January 31st stock action in NVIDIA in the last 2 hours, in particular the last hour. Go back to January 24th. Same thing. Look at the last 2 hours and then focus on the last hour. What happened? You saw a divesting of those options are about to expire worthless, or they're about to expire just with a little profit by those who bought them early, but they're cashing out. Now he doesn't have to hedge his book. So he sells his position, that he being the market maker. So all of a sudden, NVIDIA stock drops in the last hour. The problem with this is it goes in reverse. Go look at the volume on NVIDIA stock put contracts, which means you think NVIDIA stock is going to go down. Instead of shorting NVIDIA stock, you decide to buy a put contract, which means you have minimal exposure to risk of that, but also you get an exponential leverage because of how options are structured. If you don't know how they're structured and what the leverage ratio is, go look it up. Just go on Perplexity or Google and ask. It'll tell you. It's about a 1-to-100 ratio. It's pretty magnificent. So anyways, if you think the stock's going to go down, you would buy a put contract. Well, what does that market maker have to do? He's got to hedge his position. How does he hedge his position? Well, maybe he shorts the NVIDIA stock, or maybe he buys a put, which creates this exponential layering. So all of this, taking this in account, this is not about NVIDIA stock. It's not about Jensen Huang and President Trump's meeting on Friday. This is about the mechanics of how the stock market works today. It works so differently than it did 10, 20, 30 years ago. If you don't get on this, you could be taken out to the woodshed. What do we see today in the market? We see a overvalued Mag 7 grouping. NVIDIA before Monday, last Monday, where it dropped 17%, it had like a 55, 56 PE ratio. Today, it's below 50. If I'm right, Monday, there's a good chance NVIDIA will head down to $106 a share. From last Saturday, when I reran the price range projections, it had a price range of 135, I believe, to 120. What happened on Monday? It went below 120. So I was off. Oops. This week, when I recalculated, today's Saturday, the 1st of February, it has a low end or a high end of 125 and a low end, wait for it, 106. If I'm correct, and our calculations are correct, and we are in the ballpark with our price range projections, NVIDIA has lost its floor. And the market is expressing that in how it's basically speculating on NVIDIA's stock price and the price movement of it. So if you don't understand any more of this, get into the nitty-gritty of the mechanics of the S&P or how the market really works. Study the options market. It tells you a whole lot. This isn't just a short-term day trader approach. This is a long-term wealth building knowledge. If you're not looking at this market on a more mechanical basis, there is a good chance you will experience a downtrend or a drawdown in your capital that you've made in the last 24 months. So get on board the bus. Best of U.S. investors. We have the Platinum channel. Technically driven. Got the price range projection calculator that I offer as well in there. I'm adding to that. We look at this from a long-term perspective by focusing at times on the short-term element. One of the biggest ways you can preserve your capital, because that is the most important thing you got going right now, preserving your capital. And we're in a market that is overvalued. Hell, Warren Buffett just raised $325 billion sitting in treasury bills. He's not even beating inflation. Why? Because it's overvalued. You need to get smart. Hit the link below. Try us out on the 14-day free trial of the Platinum channel. We will take you through and explain the mechanics. You get a whole lot in this. You get stock ideas on the short term, but we are also rolling out this coming Friday a longer term calculations of where the market is. So you long-term investor can preserve your capital and know when to buy, when to hold, and when to sell, and how to best wealth manage your assets. Check us out, bestofusinvestors.com. Whatever you do today, it's a beautiful day here in Florida. It's fantastic. And always do yourself a favor. Don't be scared. Learn, be creative, and be curious. And always, always live loud.